Ruchit Jain's joining us now as well on the show. Ruchit, let's talk levels first. A bit of a bounce back, but we were talking to Jay Bala also earlier and he was still predicting a bit of weakness. What do you feel? Further bottoms, or further downside that we could see in the week ahead?
Yeah, good afternoon, Abba. Probably you've seen that Nifty after 1.5 months consolidation since start of July has given a downside breakdown and it has started forming this low top low bottom formation. So after Monday's selling, definitely things were very oversold and we had this expiry slated today. So this is the main reason why we are seeing the last 2-3 days of pullback rally. But generally the way this sell-off has been in last 1 week or last 10 days, it doesn't seem that markets have bottomed out at the recent low which was made. Probably I think this is just a pullback rally, and once this pullback is over, we believe that the downside momentum would resume going in the next series. So this is just a pullback rally which we are not expecting to extend beyond 8,000 or 8,050. If we just take 38.2 retracement resistance of this recent fall, then it is coming around 8,000. So maximum we are expecting this pullback to stretch up to 8,000 and 8,050, and this is a good opportunity for those who are traders in Nifty. It's a good opportunity to go short around this 8,000 8,050 zone. Probably in next series itself we would breach this recent low and at least test 7,600 levels.
All right, so still not being that convinced of this rebound that we're seeing, especially in light of the way the corrections played out earlier this week for our markets itself. Remember, in a single day, this Monday, you've taken 6% of the index is what we're seeing. But interestingly so, then what about the Bank Nifty as well? Because that's been showing some good strength today. The last couple of gains that we've seen on the Bank Nifty have also predominantly been short covering, Ruchit. So in that sense, what levels should one be working with when we talk about the Bank Nifty here?
As of Bank Nifty recently has been a leading indicator for the markets. In fact, before Nifty shows turn in momentum, whether it's at the highs or at the lows, Bank Nifty turns out first. So what has happened in recent last 2-3 trading sessions, or even if you see the recent fall, the banking stocks have shown very sharp momentum on the downside. They've shown very sharp corrections wherein they have many of the private sector banks have even breached their crucial support levels. So we think that this pullback which is there, I think the selling which would come again after this, once this pullback is over, the Bank Nifty would tend to outperform, or Bank Nifty would tend to correct more than Nifty itself. So I think this bounce back won't be much in Bank Nifty. And in fact, when this downside momentum resumes, banking stocks, especially private sector banks, what we have seen which have shown weakness, such as Kotak Bank, ICICI Bank, Axis Bank, they would tend to correct more than what broader markets would correct. So Bank Nifty remains a shorting candidate at high levels. 17,500 is a major resistance for this Bank Nifty, and we don't expect this to get crossed in this next series also.
All right. In fact, let me also bring in Amrish Valiga into the conversation. He tracks the fundamentals of the market extremely closely. Amrish, we've seen the markets really take a knock this week. It's been extremely volatile.
Very volatile. Yeah.
All right. So anything saying volatile is an understatement there. But the question is, Amrish, what's the road ahead looking like? Is it going to be choppy? Is it continue to looking somewhat weak out here?
It would be choppy, at least for a while, because it's the international scenario which is playing out more than the domestic scenario. Because in the last 15-20 days, the domestic scenario hasn't changed at all. It's the same thing, except for the currency which has depreciated to a certain extent. Against that, you have the commodities, which have also come down quite a lot. So that way, if you look at India in isolation, I think we are in a very sweet spot.
Yeah.
And if the government acts at this point of time, taking asset creation ahead, and in fact, spending on roads and infrastructure, I think we should see the economy taking off. Possibly in the next 3 or 4 months. But for the time being, I think it's the global scenario which will play out. So because of which there could be pressure. But at the same time, I don't see a major crack from here. I think that 7,750, 7,800 is a decent support. But at the same time, do I expect the market to go beyond 8,000 to 8,200 levels, start a new bull run? At this point of time, based on today's movement, I don't think so.
Okay.
Fair enough. That's actually a pretty rational approach, Amrish, given that you did also mention even if we do see more movement by the government, yes, we heard some of the right
Absolutely.
noises, it's
Yes.
still going to take time.
Government is concerned. I mean,
Yeah.
if you listen to the sort of sound bites which were there on Monday and Tuesday from the PM as well as the finance minister and the others, the secretary, cabinet secretary, I think it was very clear that they were worried. And it was expected that we will hear some good sound bites. Possibly going ahead, there could be something on MAT. We could have something on the parliament session, the special parliament session. So I think over the next few days, we will see some decent sound bites. I think that will also like ensure that the bottom is not broken, which is right now 750, 7,800.
What about on the rate front?
Rate front, I don't think the RBI governor will play to the gallery. I think he's made it very clear on that. So I think there will be a rate cut possibly, on September 30th when you have the policy.
No out of policy chance.
I don't think so. I don't think so.
All right. You know what? In fact, since we're talking about what the road ahead looks like and what kind of strategy one should be looking at, there have been brokerages that have been releasing their preference list as well in terms of what kind of bargain hunting one should be doing in this kind of a market. Shell's been looking at a couple of those brokerage notes coming in, one of them being Nomura. Shell, what are they saying?
That's right. Nomura has come up with a report which talks about beneficiaries of lower commodity prices and also the lower currency. Let's start off with the first stock that they really recommend. It's Asian Paints. They say that Asian Paints is one of the stocks which benefits on the back of lower input prices, and 70 to 75% of the company's input cost basket is directly linked to crude prices. They also go ahead and say that the earnings for Asian Paints could be higher by almost 7%, thus pegging the FY17 EPS at rupees 30 per share. The next stock that they like in the current scenario is HUL. They say that the commodity prices decline and pegged along with the revival in urban consumption augur in well for growth. They also say that currently they're building in earnings growth of 19% for FY16 and 17. It's also a major beneficiary as far as crude prices are concerned. So this is also one of their top picks as far as these 5 stocks are concerned. HCL Tech, Nomura says that INR depreciation provides further support and comfort to the margins which are expected. And they say that the current INR USD rates could provide 4 to 6% upside to Nomura's FY16 and FY17 EPS estimates. M&M is also one of those stocks which makes it to the list. They go ahead and see that new SUV launches along with the revival in the farm segment post normal monsoons would be quite beneficial for the company as well. The last one is UltraTech Cements. This is also one of those major beneficiaries as far as lower input costs concerned. Softening input costs and cost efficiency tailwinds would go ahead and support strong earnings growth is what Nomura says for UltraTech. They also say that UltraTech is expected to deliver strong earnings growth for anywhere from between FY15 and FY17.
All right, Cheryl. Well, our market guru today, Gautam Chichoria of UBS, says he has a nifty year-end target of 8,600. Listen in.
The fundamentals are still intact, but obviously the sentiment has weakened a bit, specifically around China, and that could have a bearing around the Fed rate cycle, and that would remain one of the key points to watch out for over the course of the next 1 month in terms of markets.
But you know, the fear out here and the kind of distortion that we've actually seen in global markets, Gautam, has really been the fact that are we talking of this being a short-lived correction? Are we talking about the fact that the markets are probably going into a prolonged correction? That really has been the big question. That really has been the big dilemma for a lot of investors. Maybe from a medium-term point of view, somebody's looking at this market, or even for long-term investors. What's your reading of it?
So yes, there has been concern, and as I said, sentiment has been hurt. But fundamentals are definitely much better this time around versus say the financial crisis or versus the late 90s. And again, there have been some concerns about China's slowdown, but the India's medium-term outlook still remains robust. So we do see this as a short-lived thing. But yes, one has to also remember that it's a question of where the markets were. So for example, in our fundamental framework, the Nifty year-end target is 8,600, which meant that the markets didn't offer attractive risk-reward a couple of months back, and now looks much more reasonable. So it's also a question of where the markets were trading, and a lot of the markets were not cheap or attractive to begin with.
Fair enough. So, in that context, though, Gautam, I'm just trying to understand where you really see fair valuation and whether or not you see a further correction or weakness setting in, particularly in markets, for instance, like the US, India, China, markets that we have seen severe run-ups in. I mean, the fact that we have seen such a huge seesaw this week, does it really bode ill in terms of what is to perhaps come?
Not necessarily. Again, in the short term, given how the markets have reacted over last month or so volatility could stay high for a short term, specifically given the Fed decision being imminent. But beyond that, if you look at fundamentals in the US also, they are in reasonable good shape, and nothing to worry about any major dislocation in terms of markets there. And that's one of the key drivers for global market sentiment also, how US markets and how US economy does. In the near term, obviously, China will play a role in terms of how they react to the turbulence locally. But purely from India perspective, the current levels are definitely much more reasonable. When we look at 8600 Nifty year-end target for December 15, that's based on 17 times 1-year forward PE multiples. And the reasonable longer-term average range for India has been 15 times to 16 times, which kind of indicates the current levels are fairly reasonable. I won't say they are dirt cheap and very, very attractive, but definitely reasonable, and specifically in the context of the medium-term story for India.
All right, Gautam Chowchurya out there earlier in the day sharing his perspective on the markets, but we just got a couple of minutes left for markets to close for trade, and it's holding beautifully at 79.50 is what we're seeing. But the only question out here is this short covering that's supporting it, and will this rally actually sustain as we kickstart the September series tomorrow or not? Well, we'll have to wait for tomorrow morning. But in the meantime, let's get some stock-specific calls going out here as well. Amrish, let's talk about the banking and the financial pack. That's once again got active. Right. And the reason I included the financial pack is because HDFC, which had taken a massive knock, is seeing a gain of almost 8% is what we're seeing. Right. Call it probably just short covering, or even some domestic funds probably lapping it up. Mm-hmm. But are you focusing on any names? Bank of Baroda also getting a little bit of an upgrade today from Morgan Stanley?
No, in fact, I was quite negative on the PSU banking space for the last 6-8 months. Okay. But after the sort of a fall which we saw on Monday, I mean, clearly at those levels, it made sense at least nibbling into the PSU banking space, because if you're talking of the next 9-12 months, I think these valuations are extremely decent.
So, right. Fair enough. It's interesting because we've actually seen a lot of the beaten down stocks and sectors that are starting to see a rebound. Is that again because there is some value that's being seen in some of these stocks, even with a longer term horizon, or is this just a technical bounce that we're seeing? We're talking about power, when you're talking about some of these capital goods names that have really taken a thrashing.
As of now, it could be possibly both, because surely the valuations were extremely decent when the markets had fallen to that 750, 7800 levels. And at the same time, people also look at the visual part of it. That the stock has fallen, say, about, say, 15-20%, it makes sense to buy it from a trading perspective. So I think it's both of that. But I think over the next month and a half, we should see a consolidation in this range. At that point of time, you'll have lesser of traders, more of the long-term investors getting in. So I think over the next possibly 6 weeks or 8 weeks, we could see some amount of consolidation. I mean, the range could be 7,800 to 8,000, 7,800 to 8,200 maximum. But I really don't see a major move from here, at least for the next 6 to 8 weeks.
All right, last minute spurts been seen on a couple of counters. NMDC, you got Ambuja Cements, Tata Steel also again getting active is what we're seeing. Power Grid is another one that's just seen that little bit of spurt. The expiry volatility probably playing out here as well. But Nifty hasn't really managed to break 79.50 convincingly today is what we're seeing. Ruchit, a couple of these stocks that are seeing some bit of action. Technical outlook or strategy on HDFC, that's one counter. Bank of Baroda, and a couple of the other ones like Power Grid as well, they've been seeing some bit of traction today.
So probably, Priyank, HDFC Limited, if you see, then yesterday around 1080, 1085, there's a good weekly support over there, and we have seen a bounce back with good, bounce back with good volumes coming in. So So this stock may remain range bound. We may not see no big correction in HDFC Limited going ahead, but probably we may not also see significant upside in this stock. On the higher side, 1220, 1225 remains a strong resistance for this stock. So we believe that going ahead 1080 and 1220, 25 would be the range to play out in HDFC. When it comes near the higher end of the range, look to short this stock with stop loss 1.5-2% above the higher end of the range. And if it comes again towards the lower end of the range, one can look to again buy this stock or cover the shorts over there. So this stock we are expecting a range bound movement, but overall in the markets, as I said earlier, we are not expecting any major positive momentum going ahead. So on the other names also, which you just said, we won't be much bullish going ahead. So I think one should remain cautious while going long at these levels. In fact, on some bounce, if we get tomorrow around, if Nifty comes around 8,000, 8,050 range, in that range we would advise creating short positions in Nifty, Bank Nifty, some of the private sector banks, and even the auto sector, which we feel in the month ahead would continue to go down.
That's as far as a couple of these stocks are concerned and how the outlook's really panning out on a few of them. But in the mid-cap space, non-index names, Ruchit, anything quickly that you could run us through?
It's very difficult to trade mid-cap over here, but because things have turned so volatile. I don't just if we just take some of examples of some of the mid caps wherein on Monday's trading session it seemed that major supports have been broken down, so they would continue to go a big downside could be there. But when bounce back comes in such names, the bounce back is too large, so that even if you put a stop loss trigger in your trade, it's quite possible that the view would be right, but initially your stop loss could get triggered and then the stocks may go down. So it's very difficult to trade mid caps over here. Rather, I think large caps would prefer a good opportunity to go short at these levels. So we are not advising our traders, we are not advising our clients to do any trades in mid caps at this moment. But at least in large cap stocks where stocks are facing resistances, these provide good opportunities to create short positions.
All right. 30 to 40 seconds left for the August expiry is what we're seeing. Let's just quickly mention the kind of close-up we're slated to see in terms of trade today. Remember, the series has seen a knock of almost 6 to 6.5% is what we've seen when we talk about the way the August series has really played out and the kind of correction that we've seen. It's been one of the weaker series that we've seen for some time now in regard to the way how the series is likely to close in terms of trade. But the fact is that the expiry session itself has seen a strong up move of almost 2% is what we're seeing as far as the benchmark indices are concerned. So the session at least has been fairly decent. Where did the strength come from? HDFC single-handedly playing a crucial role out there with a 9% gain is what we've seen as far as HDFC is concerned. Kin India 7.5, Vedanta 7, NMDC, Ambuja, Bank of Baroda and Tata Steel all seeing some good gains is what we're seeing. That's where you saw a lot of strength. Tata Steel, BPCL, Lupin and Kotak Mahindra were some of the other stocks that managed to close as well on a firm note. ITC also chipped in smartly. Bosch, Tech Mahindra, DRL, Infi also up nearly 2% is what we noticed in terms of the way that one really played. I'll try and get you the kind of performance that we've seen for the series as well on the benchmark, just to try and compare it to when was the last time we probably saw this kind of a weak series as well. But in terms of some of the other stocks that lost out, BHEL, Bajaj Auto and GAIL were a couple of the other names that saw some bit of cut coming in. So that's where you saw some bit of weakness. But all said and done, it's been a strong one. The closing coming in at 7958 and some strong gains coming in when we saw the way the Nifty and the Sensex both played out.
Absolutely. And if we take a look at the mid caps as well, we saw an even greater rebound there across several pockets. Some amount of course, the government's plans also are boosting stocks. So an MEP Infra, Schneider Electric, Aurobindo Pharma as well. We saw Quality, Geometric, Indocount, some of the other names that were buzzing on volumes. We had a Hathway, Orissa Sponge, or Ramco, for instance. Short covering also being in stocks like a JSW, in fact one of the biggest movers this week, JP Power, Kaveri Seeds, some of the other names there. So plenty of action in those mid-cap names as well across the board. Market breadth also by the end of it was extremely tilted towards the positive. Symphony was up like 18%, Escorts was up 18%, Quality was up 15% for example. So huge moves, Shreyas Shipping, JBF for example. Zensar, Phoenix Mills, India Bulls Realty, all these names were looking good. But overall, important to highlight the fact that for the week gone by, things have still closed net for the negative. So, you know, Amrish, it's one of those situations where the week closes and you started the week with the biggest fall since, you know, last 6 years, and we're almost closing the week, or closing the series anyway, with the biggest gain that we've seen in many months. So it's sometimes a little confusing for investors, I think, you know, in terms of what's really going on and the kind of intensity of the moves with which we've been seeing the markets rally. And it's not just us. I mean, Shanghai Composite today back up again, you know. So how does an investor really protect themselves going ahead from further volatility of this kind? Because it doesn't look like it's going to completely disappear straight away.
No, you really cannot protect yourself completely, but then I think you should have a very clear strategy in a market like this. And my strategy is quite clear that I'll only invest in a staggered fashion. I'll invest only on those days when the market is down. For example, in the last 1 week, Monday I was investing, Tuesday I stayed out, Wednesday I invested, today I have stayed out. In case the market again falls next week, Monday, Tuesday, I'll again invest. Because it's always not prudent to invest a huge amount at one go in a market like this, because we don't know as to where the bottom is. Although we expect that 1700 is a good support, in case it breaks that, we could see 7500. So you need to keep some money for that. But at the same time, whatever I have bought, in case I'm getting 10 to 15% return in 2 or 3 days, I'll surely book out to a certain extent, because I don't expect the markets to go to 8400 or 8600 in a hurry. So the next couple of weeks is a consolidation phase. Build up your portfolio at that point of time using this strategy.
That's a sound advice there in terms of how one should be looking at it. It's always good to probably look at buying in when you have such kind of steep corrections, is what we're seeing. But that, again, remember, is more from a long-term point of view. Short-term traders will always be looking at more volatile markets. But Ruchit, you know, let's try and reiterate the levels once again. On the Nifty, we've actually shut shop. Just to be precise, at 7948 is what we're seeing. That's where the closings really come, Ruchit. In terms of levels to now watch out from here, what should one be looking at?
Yeah, Priyank, so probably, you know, as I earlier said, Nifty has given a breakdown from a consolidation zone, and probably there's a low top, low bottom formation which has been seen. So the 38.2% retracement level of recent fall is coming around 8,000 levels, and we don't expect market to stretch beyond 8,000 or max to max 8,050. So in case if Nifty spot comes around 8,000, 8,050, maybe tomorrow or on Monday, participants should use that as a shorting opportunity, short with a stop loss above 8200, 8200 or 8220, and one can expect target of 7600 in next series.
Okay. In terms of you know, the stocks that one should probably focus on, Amrish, any topics, any stocks either from the large cap or the mid cap space that you can leave us with?
Mostly the large caps, because
that's where the bigger sale is.
Absolutely. So again, stocks like Reliance Industries, which I picked up, Tata Motors, then L&T. Among the mid caps, Engineers India, again HDFC, which we just spoke about, HDFC Bank. PSU banking space, picked up SBI, PNB, Bank of Baroda, Oriental Bank. Cement, I think Ambuja, where we saw prices closer to about 190 at 200. I think that was an extremely good pick at that point of time. Today I think it closed at about 210. Metals, Tata Steel, SAIL, Hindalco. Again, I'm talking of long term. I'm not talking of gains in the next 3 or 4 months, because cycle for metals will take a while to turn around, and that should happen possibly in the next 12 months to 15 months. I think by that time, these large caps could in fact become a multi-bagger.
All right. Gentlemen, thank you so much for joining us on the show today and sharing your views with us. What's lined up going ahead? Let's go across to Mitali for a look at that.
About one thing that will move markets for sure today is the US GDP data. GDP in the second quarter in the United States is projected to grow faster. Economists see it growing by 3%.